Welcome, everybody, to the Daily High with your host, Matt McGregor and Tone Vase. Good morning, Tone. How are you, mate?
Morning, morning. I'm good. I'm good. Still here in Panama, but we're bringing you the show early. I gotta head off to Miami so that I can vote in the upcoming election.
Going to say, big week for the world, really, isn't it? Jesus. Whew.
I know it's gonna be crazy. And sorry we're bringing you the show early before market opens, because we're not really gonna know how the market feels until this afternoon. But we'll discuss it. And go ahead, kick it away.
All right, man. I'll kick her off. We had a funny week, all in told, last week, but that's I think that kind of be to be expected with the election coming up this week and the uncertainty that you've certainly been speaking about for some time now. But it was kind of an inverse of the week prior in you know some respects, that we had that big fall the week prior and had quite a good bounce from it. Well, this is kind of the opposite to that in many ways, but it did finish green. You know, what is it? One of the highest weekly closes of all time in the conversation for that anyway. But look, it's not a good looking candle, but I'm still completely confident. It's just going to be a funny old week, I reckon. It could, who the hell knows at this point? There could be massive fireworks. I still think that there's a high probability of coming back and retesting that seven simple moving average here, which would be, akin to the breakout as well. That makes total sense. But then again, it makes total sense that we could rally from here as well. I just don't know. There's no immediately obvious trade looking at the weekly time frame right now. I'm still absolutely bullish. Just it might get kicked down the road a little bit. My mouse is slightly lagging, so I hope that my voice is not lagging. It just my I
No,
hadn't
you're
touched
okay.
hadn't touched my computer all day. It's worth taking note of the Socrates's EXA here on the weekly time frame. We are rounding off quite substantially right now. Uh, it's not like from the highest point at all. Like it's not. It can continue for a long, long, long time. It just follows the price, but it is curving. Like you're much more excited about the prospect of a buy on the when it's down here at minus 1.5 crossing over than you are up here at a buy. So that is something to consider. When it did have its last cross before, it was down here on this candle at 55,000. So like that looks a lot better. The RSI looks totally fine. I don't see any serious issues with the RSI. You look at divergence. No, I don't know, maybe, but that's calling divergence from back here. I still think that there's a chance that we can break up higher and then this just cracks on higher again. There's nothing to say there. The copy curve is still fantastic for me, absolutely perfect. The weekly looks fine. The weekly looks fine where it is right now, absolutely fine. But there's not much to read on an immediate trade for me there. The daily is starting to bring things a bit more into perspective, and I think as we go down the time frames, more perspective will come right now, which is ironic because it's normally the opposite way. But the daily had, got to all the way to the top, and it's had nothing but bad days ever since. Could we get to an MRI 9, a bottom candle? I think that there's a high probability of that. I definitely think we could come back and retest, which is exactly the same spot as the 7 simple moving average on the weekly, to get to a 30 simple moving average on the daily. They coincide really, really well at that 69 point. My internet, I've got that sticker coming across the screen, so let's hope my internet doesn't have an issue here, Tone. All that the oscillators look totally fine on the daily. I'm not worried at all, but it is a coin flip which way this is going to go for me here on the daily. 4 hour time frame. Let's start to make some sense of this. We did put in the low down at 67 500, and we have had a good bounce off that. We're flirting with 69 right now, which is really in that zone. I would love us to come up on and retest that 69 and a half, but then we got to break these moving averages here, and then I've been feeling really, really good. We're only $1,000 away from 70,000 from me feeling really, really good about the price. But if this fails, I've just been saying it all week. Look for a buy down here inside the green wave on the 4 hour time frame, which, wow, believe it or not, it's in that 66 range as well. That's three different time frames from the weekly, the daily, and the 4 hour, which are begging for a retouch down in that 66 zone. I think there's a great chance to buy the dip at that point if we were to get there. And if we don't get there, you're better off buying higher. This is totally liminal space to me. And maybe smart money is just staying out of it this week, but we'll see. We'll see. Uh, that's the 4 hour time frame. Bangbox unfortunately had a like the worst trade that we don't like. Earlier today, when I woke up, it all happened in my sleep. It was a minus, 10% or whatever like that. And it is in the process of gearing up for another trade right now. So we'll just review that quickly. You got to review the good and the bad trades. That's what we do here. It entered the trade, on what looked like a really good breakout. It makes sense to enter the trade. I don't begrudge the trade. We had safety measures in place, but it immediately came down and closed out the trade. Unfortunately, about 8% loss, I think, on that trade, 8, 9, something like that. Bad trade, bad trade. Then it looked to re-enter again up here and then got spooked out of the market. This is really choppy in this 15-minute time frame zone. But we are locked and loaded to regain, to recover from this trade. It could happen at any time now. We just need a bit of a push up, and we need, or just a bit more time above the 128 period moving average, and this thing will be long. So you'll definitely be long if you're in the bang box bot. It's just you're not going to miss any moves here. If this thing decides to kick off, you'll certainly be locked and loaded. But this chop zone is there. It's present at the moment. All right. Speaking of which, there is a fantastic video on the Financial Summit Network that made by my partner Baloo. Here it's a 5-minute tutorial on how to set up the bot. Absolutely brilliant. Take advantage of that. Today is the last day of this great promotion we have for Blowfin. They won't do a promotion like this again for a little time now, so definitely take advantage of that. Sorry. And we're coming back to you now, Tone. Please like and subscribe. Please share it with your friends. I'm trying to come back to you now. Is that coming back? Stop screen share.
Not yet, and not back yet, but it will be in a second. All right, cool. You back?
Am I? I can't see myself. Something's wrong with my. There it is. Am I back? Yeah.
Yeah, you lagged like a little bit, but it's not a big deal.
Oh well, we'll get through it. All right, Tone, take us away, mate. What are you seeing?
All right. Yeah, I was just flipping through my charts, and let's go to let's go to this. I haven't mentioned this in actually a long time. This is my old Pickel side chart based on cyclical analysis using Martin Armstrong's view of cycles using pi. And I always forget about these dates as they come due. So the last date was actually in January. And these dates are like every 3 to 4 years, right? So it's not like they come around often. And they always happen to be at some critical point. And I didn't even realize that the last critical date was in January of 24. Matt, you remember anything important happening in January 2024 for Bitcoin?
January 2024. No, remind me.
Oh, it is on the screen,
Oh,
so
it was
I'll probably
it was your favorite trade ever.
well, not really. It was the launch of the Bitcoin ETFs,
Oh, right.
right? So it's really incredible how these dates just correspond to significant events in Bitcoin. And I know we can kind of cherry pick and say, well, every day in Bitcoin's life, there's always been a critical event.
No,
But
that was
some
a
are a little
busy.
more critical than others, right? Like Bitcoin ETFs launching, or back in 2017 when it was literally the day of the SegWit getting into the code. And my next upcoming day is March 18, 2026. And what do I think is going to happen then? That is still, over 2 years away. We're talking 2.5 years away for the next date. And I actually think that's when the top's going to be. I think we're going to have an extended bull market because I don't think we're going to have one of these massive exponential rises. So I think because we're, getting into this bull market unreasonably slowly, and we could keep getting into the market unreasonably slowly. And what the next thing people are going to realize is that this bull market lasts longer than the other bull markets did. So I still think the price is going to get to, that nice fat quarter mil or higher, but it may take longer to get there. So just keep in mind that these dates. I have to pull this chart up. I also wrote an article for Bitcoin Magazine. I don't know if it's in their Substack that they charge money for or not. And I wanted to focus on the cycle, but from the TA perspective of the cycle, not the cycle perspective of the cycle. This is what I mean, like this is the cycle perspective of the cycle. Oh, that like all the prior ones have done this, so this one should do that the same. That's not how I wanted to do it. So I selected, and I published this on TradingView as well, so you can find this post on my TradingView account. I selected 3 long-term criteria, and one of them is, and I used a 2-month chart because I wanted to get the entire history of Bitcoin into a single chart. And if we use a 2-month candle chart, well, the first thing we see is there has been 1, 2, 3, 4, 5, and now the 6th time there was a green star candle solidified at the end of the candle. And each and every time we had ridiculous bull markets then after. And I don't consider, let's find the closest type of green star to all of them because all of them led to 100+% gains. But let's narrow it down a bit. This is a green star that's happening in continuation. It is not happening immediately after the bear market. You can see how this one, I would say, is happening after the bear market, even though, this could be both. It's a little bit of both, continuation and bear market, but this bear market was like 95%. It just happened so quickly. This one is definitely happening at the end of the bear market, and this one here back in 2023 is happening at bear market. So they're not like this one. But the 3 that are similar to this one, the second consecutive star in May of 2017, that led to some ridiculous gains. And now we have the only other second consecutive star here in September. But I think the one that this is closest to is what happened in September of 2020, because it was also more of a continuation green star, because it's clearly not happening immediately after the bear market, but it's breaking out of something that looks also like a cup and handle, which is my other major chart pattern. You see it a lot clearer on a 1-month chart versus a 2-month chart. If I switch this to a 1-month chart, you will clearly see the cup and handle a lot better. And this cup and handle suggests a target of 105,000, and that's being conservative. And if I use a 1-monthly cup and handle, the beginning of the breakout is actually at a higher price. So the 1-month cup and handle version is calling for a $120,000 target, maybe even 125. And but I wanted to be as conservative as possible for the article. And the
Does a
third
cup
target,
the cup does a cup and handle? Sorry, Tone. Just looking at that chart there, that looks like a cup and handle, like textbook, right? But it also looks like an inverse head and shoulders. Do they have the same sort of? Do you just consider them the same thing? An inverse head and shoulders and
I
a cup and
consider
handle?
them exactly the same thing. This is the reason why I like cup and handle and not the inverse head and shoulders, is because the inverse head and shoulders has an extra thing all the way on the left, which is actually irrelevant for the cup and handle.
Right.
So why do we bother? They have the same exact target, right? So this is why I'm not a fan of head and shoulders. It's unnecessary information. It's
Yeah.
additional unnecessary information. So I don't bother with head and shoulders. I stick to cup and handles. And the final, if I go back to 2 months, and the final target that I have drawn is the Fibonacci extensions. So I have 1, 2, and 3 prior situations, and 2 prior ones. You can see the first Fibonacci extension at 62% above the prior swing high. And you see it breached very, very quickly each time. And each of the prior times, we actually reached all the way to a 2.6 extension, a 3.6 extension, but let's stick to the most conservative level where we have the Fibonacci extension at 102,000. So all signs are pointing to easily breaking the 100K on this run in a minimum of 6 months. And even 6 months is probably pushing the conservative side of time, right? So I say within 4 months, I expect us to be in the 100K vicinity.
Mm.
So I wrote this up for Bitcoin Magazine. Keep an eye on that when it gets published. Let's go to the weekly scale. The weekly scale, here's the good and the bad. The good news is that we are consolidating into an MRI top. The fact that the 5 candle is the low candle, is the pullback candle, is great to get to an MRI top. So all this candle has to do, this candle will definitely print a 7. And then the toughest candle in the trend is going to be next week's candle. All next week's candle has to do is close at a new weekly swing high. It'll be a little while before we break the all-time weekly high. You still need, to break 71,000 and a half, which could happen if Trump wins. I think Bitcoin rallies a lot more than if Kamala wins. But if we get this consolidated MRI top, I love this consolidation at the top. This wick, this reversal candle does not bother me. It doesn't bother me because we're not following through to the downside yet. Now, if this week crashes on a Kamala win, then I can see a massive pullback. But until it does, until current candle starts trading below the body, I don't need it to trade below the swing low. If current candle starts trading below the body of last week's candle, I would start to get concerned. Until that happens, I'm going to enjoy the consolidation and breakout then after. Now, the breakout could be delayed if we get an MRI top within consolidation. It'll delay the breakout a bit, hopefully to the next green star candle, which comes 2 candles following the MRI top. So it could be a full month before the breakout if we get a consolidated MRI top. And I'm only going to start getting concerned if we start breaking below the last candle's body, which currently sits below 68,000. We have not gotten that low yet. So I'm going to delete this line for now because I have plenty of time to draw it back in. The allocation chart, I actually got out of my leverage trade, but it was it was on Friday before I just was totally uncomfortable. I got out on Friday. I got out with a profit, and I'm not in 100% long right now. I'm tired of putting all this stuff in, and but I guess I'll put this thing in. I hate the fact that I'm trading this on every candle. I just want to be able to trade my options, and then I'm entering trades for like 3 months in advance, and something like this. And I am gonna enter this week. I'm either gonna enter long today or I'm gonna enter long tomorrow or Wednesday. There's no way I'm gonna go through it unless if there's a waterfall crash. I am so eager to get back into this trade. I think that the risk of a crash are so low. I will try to explain this with a daily chart. It's actually difficult for me to explain everything I'm thinking right now, but I will do my best. We are sitting at excellent support right now. The MRI is pointing to lower lows, but from a TA chart perspective, I like where we are. We are exactly where we were 2 weeks ago when we bounced in the October 2023 day and October 2025, when we were bouncing, when we were like flirting with breaking 65K. That's how we bounced, and it was the prior swing high area. This is exactly where we are. We also finally touched the 20 period moving average on the daily chart, which is also a very good area of support. I don't like the fact we have a red star candle, and this never made it to an MRI top, but that's okay. So we could get to an MRI buy opportunity. It would be awesome if we got to an MRI buy opportunity on the daily, but I would be concerned if it's a double bottom at 65. But if it is a double bottom at 65, I can be bullish because it'll finally bounce off the 50-period moving average, which is absolutely awesome. Eventually, I would love to see us come back and touch the trend line and the 128-day moving average at the same time, but I don't want to see us do it on this current drawdown because that would put us in a bit of a concerning area. I would rather see this, early next year or sometime in December when people start exiting Bitcoin for their tax purposes at the end of the year or whatever. Even though I don't see tax harvesting as a useful tool this year because it's been a very, very bullish year. So the daily chart today is completely 50-50, but here's the good news. If over the next 24 to 48 hours, it looks like Kamala is winning, I think the Bitcoin price is going to crash, which creates a good buying opportunity because even if Kamala wins, Bitcoin will still rally next year. So this crash is not going to be that bad. And if people are worried that Trump may not win, and he does win, Bitcoin will rally massively the night of the election. And if there is some kind of unrest on the streets, people may find safety in Bitcoin. So I just think that what's the word I'm looking for here? The cost benefit analysis of not owning Bitcoin immediately after the election is too dangerous. But people are going to pre-run the needing to own Bitcoin after the election trade. And they're going to pre-run that trade by buying it before the election. But what does before the election mean? Does it mean 3 hours from now? Or does it mean, 4 or 5 p.m. when the news is starting to decide who won the election? Now, people are asking me, will there be a winner at the end of Tuesday night decided? I don't want to get too political on the stream, but if Kamala is winning in the polls by even 0.5% at 9 p.m. New York time, every news organization in the world will call the election over and the Kamala the winner. If Trump is winning even by 10% at midnight on election day, they will not say that Trump won the election. They're going to say, let's wait for all the ballots. We need another week to recount everything, okay? Because the news organizations are completely on the side of the Democratic side. They will instantly call it for Kamala, even if she's like losing by 0.5% and it's midnight. They're going to say, well, we all know that the evening ballots are all Democrats. And that's when you can get a lot of civil unrest and a lot of disagreement and a lot of angry half of America because they're going to call the election too early. On the flip side, if they don't call the election for Trump, even though he's winning, they're also going to make the other side angry. So I think there's going to be a lot of craziness happening. And sometimes I want to stay away from the crazy and be on the other side of the world. But I want to be smack in the middle of the crazy this time, which is why I'm heading back to America today.
Yeah, good call.
So we'll see how that goes. And the only other thing I want to point to is Mark Wood loves the 12-hour chart, and the 12-hour chart is on an MRI buy, and it's sitting at the perfect support area. The 12-hour chart has done really good things with the MRI. You can see the last MRI buy on a 12-hour chart led to a great upswing, even though it then turned and made new swing lows. It was still an excellent trade to the upside. The one before that was even better, coming right off the lows, marking the low. This was back on September 7th. And the MRI buy prior to that was not as good. And that was back in August. But the one before that was pretty damn good Was a little tricky. You have to trust the process here. But it never broke the closing low and it never broke the swing low. It was just it came close, so it was a little scary. And he loves the 12-hour chart. It came to an MRI warning before the big crash. And the other thing is the 4-hour chart finally gave us an MRI buy. After a month and a half, it finally gave us an MRI buy. The MRI buy was in consolidation, which I don't like. I don't like MRI buys in consolidation. They tend to lead to more downside. Would have been nice to see another MRI buy, but the moving average reversed us. Right now, we are sitting at a 50-50. We're doing this before market open. I'm not going to touch the market until 11 in the afternoon. If I do go full long today, it will definitely not be a rash and FOMO decision. I would rather go long at the end of the day or wait till tomorrow morning and buy in the middle of the crazy tomorrow. Okay. I actually have to figure out where the hell I'm voting. And but anyway, I think that's it for me. The 1-hour chart is also middle of nowhere. We absolutely must break these swing highs before even considering a long trade, and I would not go short now. This is the time to buy the dip or buy the breakout. Time is on our side again. Remember when I kept saying for months, let me go back to the daily chart here. I kept saying for months, between like May or probably between like June, July, all the way into September. Just wait for October. Just wait for October. Time is on our side. Just make it to October and just go long in October, right? I have the same feeling, but now you don't have to wait months. You have to wait days or weeks. Just hang in there. Just wait till the second half of October. And then we're gonna start making new all-time highs again. Just hang in there. Even if we flash crash all the way down to 62, just buy that dip. Like everything that I've been saying for like 4 months, we're now consolidating it into 4 weeks. All right, so that's kind of all my thought process in an attempt to explain it all. Because tomorrow is going to be nuts. I think I may just stream on my. We'll try to do something. Maybe we'll do a
Yeah.
stream early in the morning, and then I mean tomorrow should be a national holiday for people to like go vote, so that you're not dealing with rush hour traffic.
Well, it's a
Uh,
national holiday in Australia tomorrow, so that's good news.
like for example, if I was the king of the United States, I would make voting on a Wednesday, and I would make it a national holiday on a Wednesday, and uh, and I would make sure that there are penalties if people like turn it into a week-long vacation or decide to take like Monday, Tuesday off as well. So this way, there's like one holiday in the middle of the week for the purposes of voting, right? And uh, anyway, I'm not sure how to enforce that because you don't want to give people freedom. But I would make it a Tuesday because if a Tuesday is a holiday, everyone is tempted to take off Monday and create a 4-day weekend. But if your holiday is on a Wednesday, it makes it harder for people to take 2 additional days off and make it a 5-day weekend. So it's I would that's what I would do. I would make it a national holiday so it's easy to vote. And and I would also make it, other rules as well. Anyway, gold created a beautiful reversal candle. I don't want to be hypocritical when I say this massive daily reversal candle doesn't bother me on the Bitcoin chart, but it bothers me on the gold chart. They are incredibly different. This swing high is happening in a 3-week consolidation and not even breaking the all-time high. It neither on the close nor on the swing. But when you look at gold, you have a weekly reversal candle that is at the end of an unreasonable bull run, a double MRI top. Like it's not happening down here near the MRI support line. It is literally happening at the end of a bull run. So this reversal candle could be serious. I've been advising everyone to get out of their gold position all week long, even starting the week before. And if you get a green star candle next week, you can get back in the trade. There's nothing wrong with that, but I called gold pretty well, so I'm proud of that. And the S&P is just on a nice clean pullback. Look at the S&P. It can go lower and perfectly maintain its bullish structure. And this is why Bitcoin can still take a dive. I think the S&P is going to skyrocket no matter who wins the election. I think the downside for the S&P is very, very small, and we have a downside of another 100 points for 2%. That's basically the downside here. Beautiful bounce. I don't really want to see it solidify as a red star candle. I would love to see a big crash this week, but closing the week higher than current week. I would love to see a reversal doji candle, something like what happened the week of April 29th, but down here. A nice slightly green candle with a wick coming in as low as 5,600, no lower than 5,600. We're currently sitting at 5,728. And that is pretty much it for me. No reason to look at stocks. We're coming off the weekend. I am curious, however, on what the market thinks of. Oh, I didn't even see the unemployment numbers. Let me see. The unemployment numbers, it's already the following week. Oh, well. I don't think they were very eventful. The interest rate, there's a 98% chance that they're going to lower the interest rate, which I think is absolutely nuts. Just nuts. If this doesn't happen, also expect the market to get spooked to the downside. And I think there is a decent probability of that. And finally, here are your month-end numbers for the Bitcoin ETFs. There was 71,000 Bitcoin purchased by the Bitcoin ETFs, creating the second highest monthly purchase on record for the year. That is massive. We're kicking off this month with a negative, but that's only Friday's data. I didn't even bother changing the colors because I think by the time this week is done, we'll be back in the green. And these numbers look awesome. And that's pretty much it. And I can't wait to talk about the budget. The fiscal year is over, but I need to wait one more month before the final reports come out. But I already started filling in my data on in order to do some analysis by right here where I'm by function. So I already started filling it in, and man, these numbers are so interesting to me. And all I can say is, if Trump does become president, he is gonna be so fucked on the budget. It is gonna be insane. The next 4 years, the way the budget numbers are shaping out. I mean, if Kamala wins, it's actually gonna be the numbers are actually gonna look better because if she wins, they're gonna raise taxes and keep spending as is or higher. But if Trump wins and he cuts taxes, he will not be able to cut spending. And the deficit is going to blow out of proportion. It's going to be really, really disastrous for the. Anyway, it's going to be a great discussion. I can't wait to do a full podcast on this. All right, guys. On this note, Matt, close us out.
Thanks, mate. Thank you for a deep dive. Big Monday show. Look, I think the overview of the show is we're sort of stuck in liminal space right now, sort of 50-50 coin toss, but we're both bullish long term. And I was even more bullish than you in the sense that I see any correction as a buy the dip at this point. You sort of did allude to that as well, but that's where I see it right now. Get Bangbox, join the Discord group, because if this thing takes off and it's popping a bit right now, you'll be in that trade. You won't miss a move. So until tomorrow, thank you guys. See you soon.